All right, everyone, welcome back for another episode of Carnivore Trades. Today is Wednesday, December 18th, 2024. If you've not done so already, please give the video a thumbs up. Don't forget to like, leave a comment. I'm sure you guys got thoughts today. Subscribe to the channel. Put out free videos every day, 2 a day actually. And come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into today. What can we say here? Yeah, I told you guys a crash was going to happen for that thumbnail yesterday. I'm just kidding. But obviously, very good downdraft here today. And the worst Fed day since the March 16th pandemic low. Well, yeah, I was right around that low anyway. So we have this big outside move down and a tight slice. We're now past, at the close, we're at about 80 million. We're at a little over 100 million. So we do have that heavy volume there on the SPY. And again, what was the catalyst here? That is supposedly the lack of future rate cut guidance essentially for next year. Again, the 25 basis point cut was priced in, but it supposedly was lack of future guidance. I don't know if that's really it. I'll be honest with you. I think a couple of things are going on here. And I'm doing this video, it's 4:25 p.m. I'm just kind of reacting here in real time as we all are right now. And I'm sure I'll think about more things overnight. I'm sure I'll be studying a lot of charts and so on and so forth. And tomorrow morning, it'll give us a little bit of a different feel. A couple of things to remember, though. I want to hit on a lot of points here for everybody to kind of take out of this, because this was kind of hard and unexpected here, at least by this volume here. But one, I don't think this is really because of rate cuts. I think if this is a fundamental move here, I think there's something else going on. I mean, again, just to look at this, there's kind of like this thing that just popped up on Kalshi. Government's shutdown odds are skyrocketing from 5 to 21% in a couple of hours. There could be something like that with the debt ceiling. There's talk about the new, let's just call it because I'm not going to even say the words here. The things that fly and you get sick from, like avian sickness, that. There's stuff like that, This is just, me speculating here. This could all be nonsense. The other thing to remember, too, is on the other side of that, we have a huge expiry coming up in 2 days. And I'll probably look this up later, but there's, maybe 2 times I can think of ever where we had a sell this deep during an OPEX week, especially during a quarterly. Volatility should have been unpinned a little bit because we knew expiration was today. So we knew that was the case, but I didn't think we were going to 28. There was a lot of dealers at 18 and 20. They got run over. So it works very often. Look at that, 74% here on the VIX, and we're at the highs going back to August. Again, to kind of break this down here, how much lower can we go before a bounce? That's a real question. If we start seeing 40, 45 tomorrow, I don't think it takes too long. And let me just go back to yesterday. So obviously, small caps, I'll just take this right here. We got wiped out on that, and that was a tough sell right to the 100-day 220 handle, and we bounced. We did hit some critical numbers on the downside, though. I don't think this is going to go much lower here in the near term. Could it? If something crazy happens, can we go to the 200? I guess we did it in August. But then that led to, a 25-30% rally. But going into, and then Dow as well. So that's now, 10? 3, 6, 9, 10. That's the first time since 1974 we've had 10 straight down on the Dow. I think the Dow could probably get supported here at 420. Going back here, so I'm gonna be thinking of a billion different things here as I'm doing this. I want to go back to the McClellan. Take a look here. Again, yes, it's an oscillator. No, it does not mean we just bounce automatically. But again, let's go back to the spiders. We're getting to that April. Well, we're past the August level. We're into the April level. And, the last one over the last 2 years was March. The breadth was already near historical capitulation levels, and now it's in the basement here. So on this leg, it's definitely we definitely did some chart damage. You have the volume there to back it up, but you will get a very good squeeze here that will be tradable, and that's really all I care about, is being able to make these trades as we get them. But right now, I wish I could give you more charm levels, more gex, but we're probably not going to get updates here for a little bit as per the close. So dealers, I mean, and basically dealers got wiped out pretty much like everywhere. So we had, I mean, obviously 600. I talked about this being a level, and I was looking for this to hit later last week and the week before. We never got there. 597 got wiped out, 595 got wiped out, 590 got wiped out, and I don't really know where the next is off the top of my head here. So this is all very short dated put buying, and market makers essentially getting run the hell over. Again, VIX, we shouldn't have gotten above 18 today. 20 would have been like max on overshoot. So that indicates serious scrambling for hedges. Yeah, we're already getting into crazy levels here at the VIX. We're almost to a 30 handle already. So the other hand, on the other hand, as we've seen them do this before, you know, beginning of November, right before the election, this happened, and then we just rallied up. We had November 5th, that big swoon. We rallied right back up. So if you want to get everybody off the train for the Santa rally, I think people are off the train. I'm very interested to see what AAII looks like tomorrow. But definitely a huge, huge, huge sell. Best we've seen in a while, really since August. And they did it during market hours. So definitely got people caught off guard. And I'm just going to say right now, you know, 580 is probably our next level here. And that's on the spiders. And then you got the 100 DMA. Now, another thing too, just again, we got to zoom out. I showed you the McClellan. Weekly has not done any damage at all. And if you recall, I said that about the September drop, and even on the recovery of the August drop, you know, still holding that weekly 20 MA. Now, definitely have to respect it, but always zoom out to those bigger time frames. So I'll be very eagerly going over some charts tonight, but this is my initial reaction. Again, QQQ. Let me use the NQ. Again, big picture here. It's, you know, you get locked into the selling intraday, right? And all it did was back test the trend line. We were looking for this back. I said, you know, I predicted this and was wrong 2 weeks ago. And I said, oh, we should probably come back in here. And then, you know, that's your dip buy. Well, we went up and now we're there. It's coming down with velocity. So that doesn't mean you just buy with impunity. But we'll be watching here. Do we slice that 50 MA tomorrow, then close back up? See what happens Friday. A lot of premium rolling off Friday too. This has that December 2018 feel to it, right? Those of you who don't recall, this was a little bit different. I'm not saying we're going to drop 20%. That would be probably unheard of. Usually from an all-time high, you don't do that. But yeah, we bear flagged for 3 months here. But it's got that December OPEX, and then gap up, and then there's your V shape. So very, very volatile day. I don't think if this is anything other than massive shaking of the tree, I think there's more to it. I mean, you're not going to sell me on the fact that, oh, there's like less rate cuts priced in. The bond market will tell the Fed if it's going to cut rates, right? So, and speaking of the bond market here, and this chart here too, the expiration, correlation, unpinning. So no dispersion today. This can come back down very quickly if fall sellers get control, though. But yeah, the bond market. We'll just jump to this. You know, I talked about this like the last 2 weeks. All right, so you cut by 25% or 25 basis points. What's 458 minus 0.25? 433. What's the 2-year at? So the Fed's cutting into the 2-year rising, and now as of right now, 2-year yield's higher than Fed funds. Hello, like it's higher than Fed funds here. So maybe that's the observation. Maybe the market isn't worried about cuts. Maybe they're worried about cuts for the wrong reason. So interesting. 5s, 10s, 30s, all continuing up. 30 looks pretty good here, doesn't it? Yeah, I'd say 476, 48 is going to be your next area there. All right, so there's some positives. SMH down 3%, but you're still holding that 200, and you still technically have higher lows, and you're still inside of this channel. So this could hold up here. And again, I always look to the semis for leading indicator. And, you know, it held up. NVIDIA, it triggered the head and shoulders. It tried to do the fake out today. And it started to. And then obviously the Fed happened. But it didn't take out yesterday's low. So a market leader showing leadership. That's, you know, not the worst thing. Tesla's likely top tier. I think that wants to go to 400 by the end of the week. It might even be good for a good quick buy if you're fast, assuming we go straight into it with no bounces. And then we had Apple here too, also down, but not down ridiculous. Right? So still decent leadership. Obviously, small caps getting the worst of it. We'll have to see tomorrow. It's a lot, you know. I was telling everybody in the trading room, like, don't make decisions right now. Don't make any don't try buying the dip. Don't panic sell this. Don't do that. Wait till tomorrow. Let's get a better picture here. If we gap down, that tells us a lot more than if we gap up. Right, so, but semi is hanging in there comparatively. IGV finally selling off. So it is 1, 2, 3 pivots, and then there's the sell. Got a whole round number there at 100, a pivot, and a 50 MA. So we'll see. I would expect us to at least kind of close around there by the end of the week. We might pierce through that and then maybe back up on Friday. Dow Transport's got hit, smoked here. So no bounce at that trend line. This is going to the 200. It's right there. So the fact that we didn't really get through it, we didn't bounce yesterday, was probably a little bit of a warning. Although a lot of the time you kind of give it the benefit of the doubt when you have a weekly trend line, because you can always bounce Thursday, Friday. But today, very good outside sell. And we were down into the Fed too. All right, we talked about rates. Home builders here. So this is triggering here that head and shoulder. So that is officially in play. I'll definitely entertain it now. Home builders are just so resilient and have been for so long. Try to give them the benefit of the doubt when they do these things. So I'm going to say this needs to test 100. Maybe not in a straight line. Again, it's not going to go there straight. We have an old trend line right here. And you can see that extending through. So that could come into play tomorrow, 105. If it gets back above 115, that's a failed pattern though. But we are entertaining that VNQ. We did sniff this one out. Again, this should have bounced here. It didn't. Double top. It's into the 200 now. Let's see if it holds up here. Again, usually when you hit the 200, you'll play around it for a few days, and then you get a bounce. Let's take a look here. Yeah, we're right into these pivots. Weekly 50 as well. So there is some support here for the VNQ. A nasty outside move on a lot of things. XLF as well. Got a big gap here at 47. I didn't think 49 would go. So big sell there. Pivot high, then the gap fill 100 MA. Those are some bounce targets there. Let's look on the weekly. Again, right there, gap fill coinciding with the weekly 20. So these are, you know, we're going to be watching all these levels here. So, KRE, again, same thing, 100 MA, gap fill. Big outside move. There's KBE as well. Weekly, right into that sweet spot. And you know it's a bad day when the broker dealers are even down, right? So broker dealers down 4 1/4. I'm going to say 760. That's just the breakout there, unless they reclaim that 50 MA. And yeah, like 825. You get above 825, you could be or let's just say yesterday's high. 834 would be a false breakdown, liquidity grab type situation. Interesting here too. Oil not really caring. So it's not like oil was reacting to rates at all, or the fact that maybe the market's worried that the Fed's not cutting fast enough. Again, that's why a lot of this stuff is noise until the next day. So we just don't have enough going off of one day here. But oil, again, you know, if you looked at the chart of oil today, you wouldn't know anything happened. 71 still resistance. You got the 200 above that. 67 still support. It's been hit 1,000 times though. XLE, big outside move. Again, I'm still liking the energy play into quarter one. And I was just saying, like, everybody's mad that they didn't buy the dip at, you know, when it's up here, but when the market gives dips, nobody wants to get in front of them. Because fear is a pervasive emotion. XOP, it's probably going to double bottom. OIH, it's already basically there. CCJ actually hanging in there okay. Again, it's uranium. I'll just say $50, maybe just below that for right now. URNM. Wait, back in. Well, let me zoom out. There we go. Kind of a sloppy trend line, but let's just say the weekly 200. So just below $40, I think that'll be a pretty good area for a bounce there. It tried yesterday, but again, like a lot of things hit into certain levels yesterday, and then, you know, they bounced, and then, you know, they just got wiped out because of the broad-based rampant put buying. URNM down 58 cents. Again, I think around, you know, 18 if it can't hold up right here. Gas, nat gas up 3%. You get that F. It's trying. I mean, it's trying here. Yeah, it would be a little strange for this to break out now in this area, but it's trying. And I'm not interested in playing it. Dollar index, everybody's favorite. Look at that, new highs. So I was looking for this to consolidate a little bit more on the weekly, kind of maybe in the end of the year, and then kind of push up towards next year. But this, if this bid holds, yeah, we're looking at 109, 109.50. That's a big level. Let me just take a fib here too. I think that lines up. Yeah. So there you go. 109 to 109.50 is your 618. Oh, and you know, speaking of things, I mean, there's the dollar yen too. So hearing a lot of rumblings out of the BOJ as well, or speculation rather. Gold down 2.25, and we'll see where this ends up. A lower low here again is not the end of the world. You have the 200 below. It has not reconnected with that on the entire run up. And again, the weekly, there's really nothing wrong with this. Talked about this before, but you know, there's nothing really saying that we can't have a lower low and just put in a bigger flag pattern on the bigger time frame. So again, I don't think gold's really anything wrong here, but you know, it's down today. It was a risk off day. Everything got hit. Silver, again, lower low there. So again, I still don't really see any serious damage on the bigger time frames here. I mean, yeah, the trend line's breaking. If there's anything you guys should know, it's from watching this channel, it's the trend lines are not the holy grail. They're good, but they're not the holy grail here. And see, maybe it wants that weekly weekly 50, which is right around 29. I think I said that a few days ago. If we do start to inch down, it's probably where it's going to want to go. Then platinum here down, didn't even take out the lows from last week, and palladium lower low there. So again, nothing to do with those at the moment. Copper lower high, lower highs, lower highs, lower highs. This is looking like it wants to go down to 390. So that is in rough shape. And here's another thing I find interesting. Yeah, Bitcoin's down, but still above 100K, and you're still above the daily 20. If this is supposed, so here's the thing, I guess a positive here for the bulls. If this is supposedly the most risk-on sector, shouldn't there be more damage to these charts here? Like ETH is, you know, you could still have a higher low here if this puts in a pivot, right? You could even make a case. Again, we're projecting out a little bit, but you know, oops, you know, you could have like kind of a wedge starting to build here. You know, so there's not terrible. I mean, Doge. There you go. So you're still rocking and rolling at the 50 MA here. Some of these are not the worst things ever. And XRP still has higher lows. So I would think that the riskiest of risk-off move, or the riskiest sectors, should sell off the most in a risk-off environment. Got that from the Russell, but where's the crypto bears here? Where's all the leverage washout? So anyway, bottom line here, big sell, 103 million, definitely good volume. Bears finally showed up for volume for once in a while. I'm going to say 580 just tentatively right now. I got to see a little bit more. I wish I could give you guys a little bit more insight here. I got to see how we open tomorrow. If we gap up, it tells you a whole different thing than if we gap down. We got to do one or the other. But I'm just going to say 580 right now, and that may change. If we go through that, there's a pretty good level here around, 573 with the 100, and this little pocket here, that was the election gap. So those are your short-term levels here for bulls. You got to reclaim, I'm going to just say 595 here. And that's spiders. And then it's going to be like 59.60 or 65 on SPX. Again, going back to the Qs, we could, if we gap up enough tomorrow, it seems like it would be out of the question, but we've seen this happen before too. So don't take anything for granted on either side here. So anyways, guys, how we'll wrap it up here. Sure, I got a lot of charting to do tonight. So, but anyways, you guys take care. Thank you guys all. Don't forget to come find me on carnivoretrades.com. I'll see you guys all tomorrow.